Alright, look, before we get into this video, since my last video did so good, we got 4,000 views in that video after not posting after a year. I went ahead and did a withdrawal for y'all on my account like I said I would. As you can see, that $40,000 trade I made that I hit the other day, I ended up withdrawing $40,000 from the account. As you can see, ended up doing a $40,000 withdrawal 2 days ago. And yeah, just wanted to show y'all that. And I also want to let y'all know that I got spots open right now on my trade copy service. So if you got a live account with at least $1,000 or more in it and you want to get added to my trade copy, hit me up on Instagram if you want to try to get one of the spots before they gone. You're going to be connected to my live 6-figure trading account. Every trade I take on there is going to get placed on your account. So if you want in on that, DM me on Instagram. All right, look, so let's go ahead and hop into this strategy. I'm going to break down everything so y'all can know how I trade Nas 100. And this goes for Forex pairs, indices, gold, whatever. Anything I'm trading, it's the same thing. So let's go ahead and hop into it. So first thing you want to do is you want to pay attention to the higher time frame. I'm gonna say this now. The reason that a lot of y'all probably losing y'all trades is because it's a trend now in the trading community where everybody got to get their entries on a 1 minute chart. And with that, it's like, instead of you doing an analysis on the higher time frames, you doing your analysis on a 1 minute chart. That's why you probably losing most of your trades, because you're doing too much trading on a 1 minute. You need to do your framework on a higher time frame, and if you can get an entry on a 1 minute, then do so. But me personally, that's why I was messing up a lot in my trading, because I got stuck in that mindset of I'm on this 1 minute chart all the time trying to find the best entry possible, the tightest stop loss. Bro, you don't need to do all that. You need to go on a 15-minute chart, no less than a 5 minute. I would even tell you to take your entries on the 15 and the 5 minute chart. Don't even go no lower than that. Get off the 1 minute. It's gonna save you a bunch of money and a bunch of time, and it's gonna help your mental, because you're not gonna be losing as many trades, because you're gonna be seeing what's actually going on. So like I said, first thing you want to do is when you're looking at charts like this, you always want to go and mark off your higher time frame levels. And we're not gonna put too much stuff on our chart. We just want to get a low and a high, right? Because we was trading between this price swing right here. We was trading between this leg up right here. So these are the only levels that we really want to pay attention to right now, right? We got this buy side liquidity up here, and we got the sell side liquidity right here at this low. You see how we got these levels? So now what I'm gonna do is I'm gonna label it just so y'all can see and to make it easier for y'all. So that's the sell side liquidity. Up here we got our buy side liquidity. So before we even look to get into a trade, if the market is like this, bro, I'm not even touching the trade until it come down here, right? Because I know that below here is where stops is. The liquidity is right here, right? I know overall the market is probably trying to target this area right here, but let's say you was looking for some intraday longs, right? Like today was a bullish day on Nas 100. Let me show you how you could have got into this trade. As you can see, we came down here and swept the liquidity below this sell side liquidity, right? We took out this low right here. That's what you want to see. So now when we see that, if we get some type of displacement out of that area, right? You see how we made this new low? We made the low right here, broke structure one more time, and then we ended up pushing up above this high. So let's go down to the 15 minute now, because I'm gonna show you how you could have got your entry. Looking at this chart, what you see that after we made this new low, we had this high right here got taken out, right? Also, this high ended up getting taken out. So this high right here that got taken out, it wasn't with no real bullish move. So we're not even looking at that. We want to see moves like this where we got one big displacement up above these highs. So now going down to our smaller time frame, this would be the candle that we pay attention to. This sequence of candles right here. And let me break it down even further. Why? If we look at this candle wick right here, you see how we made this low? What happened when this candle came over here? We grabbed the liquidity on that low, right? Also tapping into an order block. I ain't gonna really go into depth about the order blocks and stuff like that. I just want y'all to understand like the concept of them grabbing liquidity and moving the market the other way. So as you can see, this was your first sign that the market was about to reverse. We created this new low of the day. As you can see, this low right here, when the market came down and pushed below it, these candles ended up closing above this low. Even though we wicked below it, we closed above it. So then we come over here to where structure started to get broken, right? We got these market structure shifts. What happened right here? We ended up grabbing liquidity, right? Displacing higher, and what did we leave? So right here was our market structure shift. We're gonna mark this off. Market structure shift, right? So now we got that market structure shift. We looking for a fair value gap. Where's our fair value gap? Our fair value gap is right here. From this candle's high to this candle's low. This is our fair value gap. This is where we want to enter our trade. So as you can see what had happened, price ended up coming right back down into this fair value gap. Where would you have entered this trade at? You want to take the trade right here. As soon as price touched this low, you could set you a buy limit right here at this candle's low. We don't want to try that. We're not trying to get the lowest entry inside the gap. We just want to make sure when we tap into that gap, we get put into a trade. So now what you're going to do is put your stop down here, right? So now we got to look and see where we're going to put our take profit at. Now you could take profit right here, right? You could have took profit right here, but is the risk to reward good? No, it's not even a 1-to-1. So now we want to look at the next high that's above that one where we actually get good risk to reward. It would be right here, this short-term high right here. So looking at that now, what does this make? It's a 1-to-3. The trade is now a 1-to-3 risk to reward. Those are the type of setups that I like to take. And you looking at the stop loss and you probably looking like this about a 70-point stop loss, which is about 70 pips if we looking at it in Forex terms. The pips do not matter when you trading. The only thing that matters is your risk management and how much you put in on the trade. Because you could have a 70 pip stop loss and still be risking only $1,000, right? Say if you had a 100K prop firm challenge, you trying to lose 1% in a day. Even with a 100 pip stop loss, you can still risk 1%. You just gotta lower your lots, right? Understand how much you're trying to get off the move. Understand your stop loss. Understand where you take profit at and adjust your lot size accordingly. You don't have to always go in and over leverage to try to get a tight stop. Because imagine if I would have put my stop loss right here on the low of the candle that created the fair value gap. Our stop loss would have decreased by 30 pips. But what happened? We got stopped out. So why is it that when we push down below this low, below this candle's low, the trade ended up still going our way? It's because the wicks do the damage, but the bodies tell the story. So as you can see, look at this sequence of candles right here. You see how none of these candles closed below this candle right here. The candle that went into the fair value gap, none of these candles closed below it. Look at it. 1, 2, 3, 4, 5. These ones right here, these 3 candles, they did push down into it, but they did not close below it. And this is why I'm telling y'all, get off the 1 minute chart. If you was on the 1 minute chart, this would have looked crazy for you. You would have been worried as I don't know what. But when you on the charts like this, the 15 and the 5, and you trade, you know what I'm saying? You trade on the higher time frames, you start to understand what's really going on. That's why you want to put your stop right here, because this candle is the one that ended up grabbing liquidity, right? So we want to keep our stop right here. It should not go lower than this if it's gonna go our way. If it do, then the trade is invalid. So as you can see, looking at the chart, it ended up just pushing straight up there. Those are the type of trades that I like to see. Usually when I'm entering trades, my stop loss is not 70 pips. I'm just giving y'all a outlook on what the setups are supposed to look like. Most of the time when I'm taking my trades, I got like a 20 point, 30 point stop loss, right? Nothing more than about 20, 30 pips. But since this trade setup is on a 15-minute chart instead of like the 5, the stop loss gotta be bigger just because you wanna make sure that you stand in the move. So yeah, that's my trade setup for 2023. All right, before I end the video, I wanna take y'all and show y'all this prop firm that just released not too long ago. I'm currently doing the challenge with them right now. As you can see, they offer accounts all the way up to 200,000. They got unlimited trading days, no minimum trading days. They maximum daily loss is 4%. They max loss is 8%. But the thing that make this firm stand out from the others is that they got a 6% profit target for phase 1 and phase 2. So you could get past your phase 1 quicker, because I know that's where a lot of y'all struggle at the most. Y'all struggle at phase 1 trying to make that 10% or that 8%. With this prop firm, it's even lower, so you only got to make 6%, and that's for both phases. So you 6% phase 1, 6% phase 2. Another thing I like about this firm is that after your first profit split, which is 30 days after you place your first trade on your funded account, you eligible to get paid weekly now. So every week you could get a payout. Most firms, they only let you get paid out every 14 days, but this firm, they let you get paid out every 7 days. Like I said, the name of the firm is called MyFlash Funding. The website gonna be in my description down below. They got a bonus right now where you could get 30% off your challenge costs, and you get an 85% payout and a 130% refund. So this means you're gonna make money by getting a payout. If you get your payout, you're gonna make an extra 30% on what you paid. So you can't go wrong. And as far as like trading on a broker and everything, they use Think Markets, and so far I have not had an issue with the broker at all. Everything been smooth, the execution, setting trade alerts. Yeah, like I said, go ahead, check them out. Link gonna be in the description down below.